Nikkei daily forecast, July 2nd, fxempire.com. The Nikkei had an interesting session on Monday. As you can see, we formed a hammer at the end of the day, which is very telling, quite frankly, because of the fact that we had recently broken out above on Friday the 13,600 yen level. We gapped up a little bit. We came back down, tested it for support, and then formed a hammer. The hammer to us suggests that the um, former resistance has become support, and that's exactly what you want to see in this type of situation. That being said, we think that a break of the hammer should send us towards 15,000 yen pretty quick. Or shouldn't say pretty quick, should say very steadily. And as you can see, uh, the market has pulled back significantly, but when you look at the dollar yen and the Nikkei, the markets tend to move in lockstep, and it should be noted that the massive sell off is down to about 38.2 on the Fibonacci, and that's definitely true in the currency markets as well. So it appears that we have bottomed out for the time being, and that we are ready to continue higher. That being said, we are very bullish in Nikkei, and if you have the ability to play the futures markets, by all means, that's how we would prefer to do it, either through the Chicago or the Singapore exchanges. On the other hand, of course, there are ETFs as well, depending on where you're at, and CFDs. But nonetheless, we think this is an all the rising tide lifts all boats type of scenario. So therefore, we are actually going to choose not to pick individual companies, and this is especially true simply because the dollar yen is struggling a bit now that we've reached the 100 area, and that's to be expected. So could be a little choppy with exporters, but overall, this market does look like it's ready to go higher.